unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to another episode of Insider Exchange. Welcome to Market Matters, as you know, live streamed for your viewing pleasure every Monday, with the rest of our show set to come out later in the week. I'm back from Cape Town. Sai's going to Cape Town, but we've still somehow found a way to put the show together for you. Shout out to our TikTok community. Good morning to you guys as well. We absolutely love having you guys on board. We're going to be taking a look at last week's race decision in Market Matters. We're going to be reflecting on what that decision means for South Africa and where we go from here. There's been talk about revising our inflation targeting, and we're going to look at all of those permutations if we can. We're also going to reflect on the month of May from a trading perspective. It seems as though that was somewhat of a positive month alongside April. It's been the strangest second quarter of the year, probably in history, with the President of the United States being who he is. But we're going to look at that. We're going to see what June holds for us. Hopefully we can see where we go from here. And then we're going to take a look at something quite interesting in our deep dive. In our deep dive, we're diving into the world of funeral policies, funeral service providers. So stick around for that. Some very interesting tidbits around that space. Yes, there is a financial link to that, and that's kind of why we have them on the show. It isn't just about the business of funeral policies, but around the things that you need to know. And then we're going to wrap up things with Investor Insights, taking a look at a very interesting delisting announcement from a South African company called AO Technologies. I want to take a look at that because the PIC was heavily invested in that business, and now we're talking something else. But that's the rest of the show. For now, we're going to get into Market Matters. Before we get into Market Matters, Sai, I was at the Finance Magnates Summit, obviously, right? So that was last week. We missed you there, and I say we because I wasn't the only one there. We have a super fan.
Everyone is there. I was getting messages like, where are you?
Yeah, super fan. Super fan, super fan. Wait, I need to find the volume for you. Yes. There we go. There we go.
We're
there
amateurs this morning.
Okay, so super fan vibes, right? And sorry for folks that are out there listening via audio, I do this, and this might just actually become a new segment that we do on the show. I love to see Simon's reactions to things because they're so amazing. So this is Sai's reaction to the super fan that I found in Cape Town.
I'm so happy to have met him in person. Hoping to meet Simon soon. Genuinely, I love this. Thank you.
So, for context, this young gentleman is studying computer sciences at UCT and took time out of his day to come to Finance Magnus to come see what was happening at Finance Magnus, but specifically said, look, he was looking forward to seeing us and hoping to see us there. And I never knew we had super fans. I certainly didn't think we had super fans. But when he told me he misses lectures to watch the show, a part of me was like, you probably shouldn't be doing
missing
that.
Lectures. But you know what? I miss lectures for way worse reasons.
This is true. That's why, yeah.
There was good surf. I would miss a lecture. So at least, I mean, just hey.
Yeah.
But it did seem like the number of messages I got from people. Are you in Cape Town?
Yes.
No, I am not in Cape Town. I had a birthday party and stuff, and so I could not get there.
But you will be there. I know you have got some work
Yeah, I
that
have
you'll
a
be doing
flight
there
this
this week, so
afternoon,
you'll be
this
heading
evening,
out there this
whatever.
afternoon. But yeah, we've got super fans out there, and guys are absolutely loving the content that we produce. We'll continue to do our very best to not let you guys down and to keep giving you the insights that we promised to. Speaking of those insights, last week's MPC decision,
Hey, it was a majority decision.
and we got it right, because we called on Monday, in Monday's episode last week, we called 25 bips.
Yeah, I know. Grudgingly, we wanted 50, but we know our MPC. We did get, I mean, to be clear, there's been some 3.2s on the last couple of cuts, and the 2s are not like 0.5%, they're like no cuts. So we did get a majority into it. To be clear, and inflation is 2.8. Now there's all the, I must say, listening to the Q&A, and it was difficult because I was standing in for Jeremy, so
Oh, yes.
so I heard some of but his whole story around the inflation targeting and stuff was, I had forgotten the original plan back in February 2000 was a 3 to 6, then a 3 to 5, and then a 2 to 4. In other words, to sort of scale it down, but then things went wobbly and Trevor Manuel blinked.
Wow. So this was already something we were supposed to do. Okay, so if we go 2 to 4, that means midpoint is 3%. Right now we're at 2.8. We could just go 3 to 6 down to 2 to 4 immediately and go straight to that 3%, which is what Deputy Minister David Masondo wants us to do as well. He's touched on that.
I think it's what's going to happen. Whether we go 2 to 4 or 3, I kind of like the 2 to 4, but 3's to me just clearer and
It's a number.
it's a number rather than a range. And anyway, our governor's going to say 3.
That's it.
Yeah.
I'm going to anchor at the midpoint of the range anyway.
But we've had the same target for 25 years. And to be clear, our economy has evolved and changed and boomed and bumbled for those times. It's an exciting time to be alive. And I know that's a very nerdy thing to say, but I'm excited for changes to our target. And we could drop to 2 to 4 or 3. And effectively, he also then said that he thinks that his resting rate, and of course there's fancy economic word for it, I can't remember. The resting rate for repo is then 6, which then puts prime at 9.5. And then our next discussion is we phone all the banks and we say to them, yo guys, the 3.5% markup on prime seems A, like a bit of collusion because you're all at the same.
Yes.
And B, a little bit extreme, because to be clear, banks were doing this in the 90s when prime was at 26%. Yeah, I know.
So you're saying banks have been making money?
They make plenty of money. And they must drop that 3.5 to. So we could have repo at 6, which puts prime at 9.5. But let's take some margin off the banks because banks got plenty margins and move that to 2.5. So then prime's 8.5. Yo.
That
Of course, we're a long way from there because we're currently at 10.75.
Yeah.
But, you know, hey.
And at 25 bips per cut, it's gonna take us a while to get down to that
We're going
level.
to be on to our third governor. When does our governor's term?
I think he's in his second term at the moment. The second term, I'm not sure when it's set to end. We'll check on that. But from an inflation point of view, I think what we don't realize is, and for the longest time, I also didn't kind of have this view, and I'm starting to adjust my view. I remember when there was a time where I said, look, let's...
I know, he's in his third term. From November. It runs to November 29. So by the time he steps down,
Yeah.
at 0.25%.
We might just be there. So my thing around the inflation thing was, at some point I said, perhaps we should let inflation go a little bit in order for us to stimulate the economy, right? But at the same time, I've had conversations with the likes of David Shapiro who've raised valid points to say you can't have higher costs of business, higher costs of financing and things from an interest rate point of view, and that it doesn't make it conducive for business. And that's also effectively what our central bank governor has been saying by trying to anchor inflation lower, right? So yes, there's a bit of pain in how it is done and the mechanisms to anchor inflation lower, as we have been witnessing firsthand. But in the long term, it does prove to be beneficial. My question then becomes okay, inflation comes down to 3%. Repo goes to 6, as you said. Prime goes to 8.5, 9.5, whatever it is, below 10, right? It's easier to finance things. It's easier to grow things. It's easier to do business. Banks still need to adjust their lending criteria to accommodate for business to be able to get financing.
100%. And they do better because if we're all paying less on our debt,
they're taking less risk.
and we're not putting money under the bed, we're spending that money we save. So they
Yes.
make it up in other
ways. Okay, so that is generally beneficial from that perspective. But then how do you use that to drive growth? How do you then start to say, okay, it is cheaper to run a business here, to grow a business here, come do business here, but we still need to be driving growth. We had those conditions in probably the early 2000s where things were moderating, but we also had it recently in the pandemic where because of the lack of movements and all of that in the economy, everything basically came down to a very low cost base to do things. But we still haven't really seen, and I didn't see it in the budget speech, and I'm still not seeing it from National Treasury and the government on how to stimulate growth. We still have an unemployment crisis.
So we actually had surprisingly high prime rates because you remember, so prime got down to around 13 in September 01.
Okay, so before that, so maybe the 98-ish
So
era?
98, it was at 26. It says 25 and a half, but I remember taking a bond at 26. And then we had the crisis. So every time it's sort of gone up and down and up and down, but the trend has been to lower highs and lower lows until the current bunch of ministers and their views. But it has been certainly trending down. So to your point, certainly lower inflation helps. Lower inflation expectations helps. It helps cost of debt. It helps your economy. It removes the risk of a crazy inflation rate. All of those sort of things are really, really grand. What it doesn't do, and that all helps grow an economy. But there's more than just rates that grow an economy. There's also reliability of electricity. There's also ease of moving funds in and out. There's all of those sort of things. There's, if I'm to build a widget factory, and I'm looking around planet Earth, why South Africa? Why not one of the other many
What's the
markets,
business
Asia,
case?
LATAM, all of those sort of things. So it's more than just that. And small things. I mean, I think the fact that our government of national unity is almost a year old is helping, because we saw something fundamental, which was the ruling party for 30 years lose, and just say like, oh, chill, okay, let's talk. Instead of like, oh, not chill, let's shoot, which has been a trend amongst many countries in the world over the years. So there's lots to it. Unfortunately, a lot of it is our government and our government policies and...
See, speaking of government policies, I want to take a look at what we can look forward to in this month. Certainly no interest rate adjustments there. We know that this week is non-farms numbers from a data perspective in the US, but generally we're halfway through the year. And I say halfway because we're in the last month of Q2, technically speaking.
No one works December. So.
Right, no one works December. So technically we're about halfway through the year. And the market has had, I don't even want to say the most interesting time, because it's just been so much that's gone on. And what's the count sign? How many days left? 1,300 and how many?
Oh, you want me to count that? I don't do it in my head, gent. I got to do it.
It dreads. I dread it every time you bring it up. But the amount of days left of the Trump presidency is what we will do. Perhaps we should have a clock.
1,328.
Perhaps we should have a clock on the show that counts us down. Because at some point, I fear we might need it.
I don't know. We've been stuck above 1,300, well, for actually 72 days is the honest truth. It feels like forever. We should have a party when we break 1,000. But
Okay.
even that's like next year sometime. I mean, don't start buying, party balloons just yet. They're going to go flat.
Oh, we've got so much to get into. We've got so much that's happening in life.
What
We've
also
just-
starts to happen, so 9 July is the 90 days. Although it's awkward because
we haven't even hit 90 days.
since the step climb down. So it's awkward because the
Oh, the 90 days of the tariffs. Yes.
So he keeps on talking about. So he gave China another 90 days, then he
Yes.
gave Europe another 90 days. Is it the same 90 days, or is it a
I
different?
asked the same question. Apparently, everybody gets their own 90 days.
So apparently, and Japan is just taking a hard line. I will find you the quote from the Japanese relevant minister, whose name I will not try and pronounce. Come on, where are you? The PM, we have no intention to compromise on US tariffs. In other words, bring it on, buddy.
Well, to be fair, they are the one country that's already survived an atomic bomb from the US. Two. They're pretty much prepared for anything the US has to throw at them.
They're a small island. They've got more money under the bed than our president, and they're old. They're like, yeah.
They're like, no, we've seen how this plays out. We've survived this before.
And what does America have that Japan wants?
Nothing.
Well, actually, I was going to say adult diapers, but they get that from Germany.
Okay. Aging population and all.
Japan sells more adult diapers than kids' diapers, which is not a surprise.
Yeah, well, their companies are 100 years old each.
Germany sells more adult diapers than kids' diapers. That is a surprise.
There's a conversation in there that's a sensitive one that we will not get into about the things the Germans used to do.
Maybe edit that out.
We'll edit that out. Side note, while we are on things that are detracting you from other topics, we continue to try. Sai this week is a gentleman by the name of John, with an H. Not without
that's
the
how
H.
you
There's a Jon without an H.
Yeah, but when you do that, you just confuse.
So that's what we've been trying to do, right? So I've been, while we're getting suggestions from our community, I thought, let's go specifically for names that might have more than one spelling. And I just pulled a list.
Keep it difficult.
Keep it difficult, but not say how things are spelt. So give you a name like Deborah. Our ghost mic is on Deborah, but Deborah could be Debra, or as you would say it, Deborah, Deborah, which is Deborah, right? Both of them spell Deborah, just differently, right? I went in and I thought I could be Layla, which could be Layla or Leila, depending on which part of the world you're in. The CEO of the Johannesburg Stock Exchange, shout out to Dr. Layla Fari, is Layla. All right? I came out as Lelo. Not Layla, but Lelo.
Yeah.
We'll keep trying. We'll keep going. We don't know where this is going to end. We'll see where it goes. But what we do have to wrap up is our market matters. We do have to get onto our other content pieces and our other segments. And before we go, I want to take a look at, as we said, the markets and the performance of the markets. The JSE opening today, markets moving in somewhat of a positive direction. They've been positive since the Trump thing started, right? So since the Trump suspension of the unsuspension of the, we don't know what to call it.
Yeah.
Since that, markets have been moving on the up very calmly, very steadily. And I suppose markets don't want the volatility that comes with what happens later. You know, I think I'm looking at the markets now. I'm looking at the JSE opening up marginally in the green, but a lot better than where we closed out last week towards the 86,000 points level. We're now almost back at all-time highs at 87,000 points on the top 40. We will, by all accounts, break all-time highs this week, I should think. But that is the pattern and the nature of what we're going through at the moment. If I look at it from a performance perspective on a monthly basis, it's been positive months since the start of the year. So January was positive. Every month was positive, including the month where Donald Trump announced to the world that the world was being liberated, or that America was being liberated.
Our markets are doing great. Scalclo does this thing. We're up 3.1% in the month. Our 12-month return is 27.3 for equities. I mean, these are big numbers.
That's huge numbers.
Yeah.
You definitely want to be in the South African market, clearly, or if you haven't been.
And it's not just us. So US markets are flat, but if you pull up other sort of EMs, and I mean, not even EMs and the like. So what have we got here? So we could bring in, so India's doing lacquer, Mexico's doing lacquer. I mean, they're all up around, and this is just year to date. You know, we're up 24.5. We're the lagger. Okay, who was EPI? EPI was India. Okay, so India's at 2%, Mexico's 28%. I mean, it has just been a fairly wild market. Germany, the DAX is up 32% almost. Aside from the US, and the US markets, S&P up 0.5%, Nasdaq up 1.5%. That's year to date. Japan up 10%. There has just been really, really strong markets outside of the US. France up 18%. Australia. Australia up 8%. But if we broadly just bring in emerging markets as a group, EMs are up 8.8 relative to the US 1.5 for half.
Do we think that this has, I mean, a part of it is something you and I have spoken about the fact that US markets ran hot when other markets didn't, right? And they ran overly hot, and perhaps this is that cooling that naturally happens in a market, the natural kind of rebalance of things, but also your incumbent isn't exactly being pro-market at the moment, I should think, which is interesting because we have a US company that we're going to be taking a look at in Investor Insights, but that one is a very special company.
Yeah.
That one is,
So it is
immune to these things.
That Trump has spooked the world. But to your point, US markets peaked in around October and they were expensive. And if you look at them on historical, they're like in the top 5% of expensive. This isn't like, they are very expensive.
Exactly.
Now, the Mag 7 or 6 or however many's left in there, they're mostly doing okay. I mean, so when I say, okay, so Alphabet, Amazon, they're doing like Nvidia, doing perfectly fine. Apple, and then Tesla. Actually, but
Meta.
they all came in quite expensive. There has been a sort of some re-rating happening in that space. And then money wants a home. And if we look at a 10-year US, which is now 4.443, that money which is left there, where's it been going? Well, it hasn't going into equity. The Russell 2000 is down 7.4% year to date. It's been going into other markets and gold.
And gold. Because everything's been going into gold of late. Let's look at gold before we go. Let's look at quickly where the gold price is. I think we are around the $3,300 mark. Just going to see. I think it was 3,200 last I checked.
3354 gold is running.
3354. We're back above there. Okay, cool. So we closed out the week last week towards the 33, around 3290-ish. We were sitting in that range. So we're up at 3350 again. Yep, gold is running. Gold is moving.
Week before last was the highest ever weekly close for gold. And I mean, gold, so it's been consolidating at around about 320 to 330, about $100. I got to say, I keep on expecting it to come back to around 3,000, and gold is like, nah.
So that's quite interesting. Someone was asking me over the weekend in Cape Town, what is the worst thing that could happen to gold at the moment? And the only thing that came up in my mind was a rational Trump. And then we all laughed together. Because
So that's actually fair, because I had this conversation a while ago, and someone said, well, you know, Trump is however many years old, and notwithstanding he claims he has the physique of an NBA quarterback, he doesn't. He might be 6'3", probably not. He might be the weight he says, no. Anyway, and they were like, oh, but if Trump passes, we solved. I'm like, J.D. Vance.
So a rational Trump is the worst thing to happen to the gold price, because that would mean risk sentiment would come back into markets.
So in the short term, yes. In the longer term, what's playing out is central banks who abandoned gold for most of the 90s and the aughts. They're moving back in, and they're moving back in for a couple of reasons. The dollar's fine. They're worried about U.S. treasuries and how that plays out with the debt that they're sitting on, and what happened in the when Russia invaded Ukraine, when suddenly they realized that, like, you know, what's that saying? If it's not your wallet, it's not your crypto, and like if it's not in your safe, it's not your money. So gold they can physically put under the Kremlin or under the Red Square or under wherever, they can physically have it. And I think, you know, if you are a slightly antagonistic nation, you're certainly thinking that. But even if you're not an antagonistic nation, you're just like, hang on, it turns out that we could get cut off from everything. So even if you're France, you might be, Although I don't know if the European countries still have gold things. Did they have to give it to the ECB?
I'm not sure. I think they did. We at least know the UK hasn't. We know that they will never do that.
Yes.
I'm going to posture a different theory as we part here. I'm going to take a page out of a local playbook. What happens to a company when its debtors decide we don't have the money to pay? QSA Taxi. That's Market Matters. We're going to leave it on that note. We will get into our deep dive. We'll put out the rest of the show later in the week. Thanks for tuning in, folks. Thanks for jumping onto the live. Letogonolo, thanks so much for doing that. We're glad you didn't miss lectures to join us. He was, so interestingly enough, when I was showing you the video, he jumped onto our live chat to say good morning as well at the same time. So that was Market Matters, and that's where we're going to leave it.